Morning, Steve Free in Chicago with the morning grain comments. Nice weather across the Midwest over the weekend. Should have been some good harvest progress. Continued to hear soybean yields better than expected and corn yields pretty variable, but for the most part around the USDA numbers on Friday. I think most people taking what the USDA gave on Friday and trying to push ahead and look forward. USDA did lower acres as what was feared by the FSA numbers, but they also raised yields, which means that maybe the yields on the next report might be a little bit higher. USDA did lower exports for beans and wheat, and some people think that that's kind of the market activity that we're in right now, and that we may be too high in prices to help demand, but we may be too low in prices to get farmers to stimulate a lot of selling. They're still thinking that we might leak a little bit lower over the next couple of weeks as harvest winds down. We're estimating bean harvest about 60-65% done, corn 40 to 45%, and especially in the West, when we start running out of storage, some of that grain might move to the marketplace. So we'll see if there's any pressure because of that. Big news overnight was talk about China stimulating their economy. That's helping most commodity prices. We've seen a little bit of bounce in some markets like soybean oil, wheat, and sugar because of concerns about El Nino, especially in Southeast Asia. So all these things are kind of coming together right now. It suggests we might be in a trading range for a while here in corn, beans, and wheat. USDA is closed today because of the holiday, so we won't have any export inspections. We won't have any crop progress or crop ratings after the close. All that'll be tomorrow. And so we'll just kind of watch and see how these markets trade within maybe a more sideways trading range. As always, these are my thoughts, not those of ADM and ADM Investor Services, and have a safe and profitable trading day.
I would sneeze because I'm like 9:40 calls.